Yeah, I'd like to welcome you back to Mega Profit online trading channel. Here we give analysis of different market, more especially on the crypto index trading, Bitcoin, and other crypto tokens or coins. All right, we also have teach people how to trade, More especially, we have an ongoing course which has to do with charts, knowing how to trade with a chart. Chart is a very common aspect of every market. You can see chart of Bitcoin, you can see chart of Forex, you can see chart of shares SP 500. All of them is a graphical representation of the flow of money, like we said. Now, this course is ongoing. I've actually made some release of videos on how to identify trend using our top-down analysis, how to identify key levels of support and resistance. All right, if you find this video helpful, please make sure you comment and like. Okay, you can send me your questions. I'm ready. I'll be ready to answer them accordingly. Now, I've also taught on key levels of support and resistance, which I would like to round this up with this. Now, support and resistance levels in this topic are the end of the day or this video. You will be able to identify the support and resistance. You're able to know how to use the trend line. You also know how to use your trend channel. You also know how to use your psychological levels. Okay, now, what is support and resistance? What is support and resistance? A support and resistance is one of the most widely used concepts in technical analysis. When you analyze it technically, we don't do without the support and the resistance levels. Okay, now these two concepts serves as a backbone of price action and can help you identify potential entry and exit point. One thing I know about trading, what you don't do without is when you enter the market and when you move out of the market. So the support and resistance allows you to know when to enter the market and when to move out of the market. Strangely enough, everyone seems to have their own idea of how you should measure support and resistance. All right, so everyone has different way of interacting with the market, okay, and how to measure it. Now, the structure here, you can see, look at the diagram above. As you can see, this is a zigzag pattern. Now, this zigzag pattern shows us how the bull market moves and the structures. This is called an impulse leg. Okay, mind you, anytime you identify your trend, the next thing you do is identify your key levels of resistance. After identifying your key levels of resistance, then you have marked your support and resistance. So here now is my support, here is my resistance, here is my support, here is my resistance, here is my support. Okay, here is also my resistance. So what is resistance? When price moves up and then pulls back, the highest point reached before the pullback is known as our resistance. Price moves from here and got to this place. Before pulling back, the highest level that price moves to is our resistance before it starts pulling back. And when it pulls back, the lowest place where it dropped before continuation is also known as our support. So here now, this is resistance, this is support. Now, when price closes and when price passes this level, this resistance has been turned to support. So you see price moving at a higher high, then lower high, higher high, lower high. So we can represent them by, this is called an impulse leg, pullback, impulse leg, pullback. So the impulse leg is the higher leg. Okay, the higher leg that has the highest length is called impulse. So this is impulse This is impulse. This is what? Impulse. Okay? So you see the length of the impulse is higher and is greater than the pullback. Pullback doesn't go beyond 60 something percent of the impulse length. So you can say now this is impulse pullback, impulse pullback. We can also call this higher high, lower high, higher high, lower high, higher high, lower high. So that's how the market works with the support and resistance. And we said that resistance level in the surplus of sellers, creating selling pressure that resists the upward price movement. I will show you how to trade this. Now, when price continues up again, the lowest point reached before it starts back now is what? Support. So I talked about this. Support level indicates where there will be a surplus of buyers, creating buying pressure. That is here. People will be waiting to buy at this level, so that as price goes up, they will make more money and sell at high. So what you do is the market, the psychology behind the market is you buy low and sell high. Buy low and sell high for a bull market. Okay, buy low at lower price. Then when price gets up, let's say you buy at $3 and price gets to $10, you sell. How much did you make? You make $7. Okay, then you allow price to come back again, maybe possibly at $6. You buy back again at $6, and when price now goes to $15, you sell. And how much did you make? Okay, you have made around $9. Then price also drop back again, maybe at $8. Then you buy back again, and price get to $20. You sell back again. So that is support and resistance for you. That's how it works. Okay, that's how it works. Then you can trade support and resistance in two ways. You can trade support and resistance in two ways. We can trade support and resistance using our bounce. We can also trade support and resistance using what? Breakout. So we can use breakout in trading support and resistance. We can also use bounce. So you need to identify whichever one style you like to use in trading. Like I also use a bounce. I also use a breakout. So let's go to the live chart where I will show you how you can do all these things. Okay, all right, take a look at this. This is a bounce. Okay, now market came down to a support level here, then went up to this level, which is called our resistance, from what we learned from our PowerPoint program. Now this is our resistance, and what happened? You allow price to come back to what? To support. Here is our support. You can see the line here. So what do? You buy at a bounce. Okay, so you buy at the support, and when price gets to resistance, what do? You sell. Now when you sell, price turns back to what? To the support here again. The previous resistance now turn to support. You buy back again. This is called our what? Our bounce. Okay, see it coming to, then it makes a double top here. Then when market makes a double top, then you expect it to drop lower. That is how you can trade your what? Bounce. Let me give you more example again. Take a look at this. Take a look at this. So this is a support, then this is a resistance. You sell here, price goes lower, you buy back. Okay, this is a break. So this is a bounce. Sorry, this is a bounce. You buy back, and it goes to a resistance here. You sell again, and price turned lower, then at a support here. Then it breaks. You buy at a bounce here. Then it gets to this level at a resistance. Then you sell again. Then price starts coming down. Okay. So where is our support here? Our support here is within this level. Within this level. So you can see price has also touched here. It is possible you can get lower to this level than where we had surplus. We have a lot of surplus buyers here, you can see. So people will be waiting, willing to wait here and buy. I'm also waiting here to buy. It could also end up here but it could get lower to this place before buying massively to the upside. So this is how to trade a bounce. But if you want to trade a breakout, okay, a breakout, let me show you an example of how you can trade a breakout. I said you trade the support and resistance in two ways. So you trade the bounce, which I have taught us how to trade the bounce. You buy at support, okay, and sell at resistance. Then when trading a breakout, what you do is you allow price to confirm the support. Then after getting to the resistance, for example now, price confirm the support here. Then after getting back to the resistance, what do? You allow market to break out. So this is a retest to the resistance. So telling you that market wants to break out. As soon as it got to this point, it break out of this level. So what you do, you place your buy here, you buy here. So it broke out. Then this is also a retest of the breakout. Then it came higher again, okay, then moved higher. Then you can close here. This is the resistance line here. So when you close here, you allow market to retest back to the support. Then after breaking out, this is a show of breakout, okay, it gives you a sign here that market has broken out from this resistance line. So what do? Came down here to do a retest. After coming back here, what do? You buy at this level. So at every breakout level from the resistance, you buy. So with this system, you don't buy at support, but you buy at the breakout. Another system, another example is this. You can see now, market came here, okay, turned back to the support. Then let's watch out the breakout. This is the breakout here. So market breakout, came down, made a retest and break out here. What do you expect? You expect market to do what? To go higher. So this is how you can trade your breakout system. This is how you can trade your breakout system using your support and resistance. All right, let's look at the rules and the psychology behind support and resistance. Rules and psychology behind support and resistance. The psychology of traders. Support and resistance aren't just lines on chart. They reflect the collective psychology of the market. So what that means is when price passes through a resistance, and that resistance could potentially become what? A support. Okay. Now, these levels form because of what? Traders' behavior. The more often price takes a level of resistance and support without breaking it, the stronger the area of what? The resistance or support. So you need to allow this to sink over time. These are rules. You have to write them down. These are rules. Okay. At support, buyers believe the asset is undervalued and jump in, creating what? Demand at support. So that's why we buy at what? Support. When price goes down, nobody does the business and buy at higher price. No. People do business buying lower price to sell at what? Higher price. The psychology behind this is when a support or resistance level breaks, the strength of the follow-through moves more depends on how strongly the broken support is. Okay, it depends on how the broken support is. So now I want us to look at these rules and psychology of traders very well. At resistance, sellers feel that the asset is overvalued, increasing what? Supply. They increase their supply because they feel that the asset is overvalued. So these are the rules guiding support and resistance. These are the rules guiding what? Support and resistance. So this is also a way you can trade your support and resistance. Here you can see this is a very strong support you buy, and what? This is the resistance you sell. You go to the support again and you buy. For those trading a bounce. But if you're trading breakout, what you do, you allow market to break out of this line, the resistance line. Then as soon as it breaks out, as it comes down again for a retest, you buy, because market has shown you sign of breaking out. Thank you.